Kick it off. Senator Brown has joined us. So I'll give an opening statement, and then the senator will, and then our three witnesses and some of my colleagues. John Sarbanes is here. We'll have some Q&A. I think the three witnesses agreed they'd try to be here a bit for the media to ask them questions. Well, thanks for all of you being here today. Today we're covering TPP and the automotive supply chain. And we're doubly fortunate that Senator Sherrod Brown is joining us. He is so passionate about all issues relating to the economy, and if I might say so, having served with him in the House, the automotive sector. TPP is one of the most important trade agreements ever for the global auto industry. The 12 TPP parties are both major consumers of automotive products, representing nearly 40% of the world GDP, and major producers of automotive products, covering 4 of the world's top automotive producers. We have spent decades, as Senator Brown will attest, trying to access the Japanese market. One way to assure this in TPP was to tie the reduction in our tariffs to the increase in successful access to the Japanese market. A different course was chosen by USTR. Instead, to have a lengthy period during which the tariffs would be phased out, automotive and truck. And there's a special dispute settlement system that is meant to reinforce the need for us to obtain real, meaningful access to the Japanese market. And so one of the questions before us and before the Congress and before the public is, will these provisions work? Vietnam and Malaysia are new markets. Are they sufficiently robust markets that we will see a meaningful increase in North American exports there? If robust markets do exist, will North American producers be able to compete with Japanese producers in those markets? And will these markets be truly open to auto exports from any source? Or will they find ways, as Japan has done in the past, to resist imports and insist on local production? As said, these are questions we will be exploring not just today, but in the coming months. But I believe a major focus of the discussion today will be on rules of origin. It's important to have this roundtable today to open up a discussion of this subject. And that's a major purpose of this. We've had before in the House 4 panels on important TPP issues. Today's an effort to really kind of kick off, to open up, as I said, a discussion of rules of origin that seems so abstract but have some real potential meaning. What could be the import of the rules of origin in TPP that are different and in many respects weaker today under NAFTA? What could be the import on the content of assembled vehicles and today's production by American auto parts companies? Unlike the sessions we have held to date, the area of rules of origin has not been subject to intensive scrutiny and debate. We recognize that rules of origin are complex, but we're hoping, as I said, this session will begin the process of making them more accessible. We cannot allow the complexity of the issue to stymie us. Jobs are at stake, and we must understand exactly what's been agreed to. It is my hope that a fulsome debate about the pluses and minuses of these rules will follow from the session we are having today. In the sessions to date, we have sought to hear all points of view, and I think we have succeeded. The staff has made a diligent effort in the working paper that you have to ensure that various opinions on the rules of origin are included. This is a copy of that. It's very lengthy and is detailed. We sought to obtain a panelist today to join us who would be in full support of the present TPP language, but we were not able to do so. But we're privileged today to have three panelists. The first is Professor Mark Wu, a professor at Harvard Law School and a former USTR negotiator. The second is Josh Nasser, Legislative Director for the United Auto Workers. And the third is Bill Hickey, CEO of Lapham Hickey, a steel service company that supplies the automotive industry. So, Senator, once again, it's glad to be with you.
Thank you, Congressman Levin. Thank you so much. And Congressman Sarbanes, thanks for your interest in joining us. And Sandy Levin was a mentor to many of us, particularly in the early days during the NAFTA fights 20 plus years ago. So thank you for the work you've done all these years. Thanks for the panelists, Mr. Wu, Professor Wu, thank you, and Mr. Nasser and Mr. Hickey. Good to see you both again. Thanks for joining us. The value of today's roundtable, of course, is hearing from you. I will be brief, as Chair Levin was. We often hear, I want to talk particularly about the auto provisions, we often hear about the supposed opportunities for more jobs, for more experts, for more economic growth that trade agreements will create. But when I look at TPP, I don't see many, if any, what I like to call offensive opportunities. By that I mean opportunities to break into new markets, to expand American exports and growing American jobs. Cheerleaders for this agreement, from Republican leadership to the White House to the Wall Street Journal editorial page, say new markets will be opened up to American cars, but we've heard those words before. In reality, under this agreement, many of these new markets won't be open on day one or day two or even year one or year two, as in the cases of Malaysia and Vietnam. In fact, it'll be 7 to 12 more years until American automakers have full access to these heretofore and still closed markets. TPP will do nothing to level the playing field with our top competitor, Japan, or to change Japan's distinction as for a long time, the most closed auto market in the world. Car makers in Ohio and Michigan and Maryland and across the country will still compete with huge numbers of Japanese imports, but we won't have the same opportunity to export to Japan. So if there aren't any offensive opportunities, if you will, I would expect our negotiators at least made sure the agreement protected American car makers and American auto workers from a flood of cheap foreign competition. I would expect they made sure the benefits of the agreement would go towards its members, the people that negotiated, the countries that negotiated TPP, part of the negotiation process, and each of these countries, of course, made concessions. That's what negotiations are. That's not how I read the text, particularly when it comes to the rules of origin for autos. These provisions, which determine how much of a car is made in the TPP countries, are weaker than NAFTA's. I never thought I'd say this, but this agreement makes NAFTA, an agreement which Sandy and I fought hard to defeat, actually look good in these provisions. TPP's auto rules were written by Japan for Japanese automakers to the benefit of China and at the expense of American jobs. To make matters worse, the agreement lacks the strong and enforceable currency provisions that Ranking Member Levin and I, along with our colleagues, pushed for in the fast-track debate. As a result, I'm convinced TPP will jeopardize the livelihoods of hundreds of thousands of Americans whose jobs depend on the U.S. auto supply chain, some 600,000 in my state alone. I'm hopeful our discussion can re-examine these issues and explore ways to persuade the administration to stand up for an industry which the president personally committed to saving. I mean, you go dial the calendar back to 2010. President Obama had taken office the year before, losing hundreds of thousands of jobs a month. By 2010, by the time the auto rescue began to take hold, we've seen economic growth every single month for the last 70 plus months. Don't squander that. Chrysler has posted 7% gains in sales. The last year, Ford and GM not far behind with 5%. We shouldn't jeopardize the progress with a trade agreement that sells out the American auto industry. Mr. Chairman, Mr. Schiff, Steve.
Well, two of our colleagues have joined us. Do you want to say something to open this up? John, and then Adam.
I'll be very brief. I want to completely associate myself with the comments of Senator Brown and Representative Levin. The two lenses I'm using, which I think many members are, is you look at the text and decide whether that's up to the standards you expect in this agreement, and then you review whether you think the enforcement of whatever that text is going to be robust enough to actually make it happen. And in this case, when we're talking about the rules of origin in terms of the automotive content, we're talking, unfortunately, about text itself, which doesn't seem to meet the standards, as has been indicated by our colleagues here. Beyond that, I will continue to bring the enforcement lens because I believe that fundamentally that's the Achilles heel we're dealing here with. And if you look at the experience of NAFTA and other trade agreements, that's the lesson we shouldn't be relearning every single time. So with that, I yield back and appreciate the opportunity.
Representative Schiff.
Thank you. I'm happy to yield and appreciate being invited and look forward to hearing what these gentlemen have to say. Thank you.
Okay. Well, Professor, we'll start with you. And let me just say, in a sense, there may be a special burden on you because you go into detail on the rules of origin. And you've had experience with it. And we'll ask you questions. I think there are so many here, it will be helpful. Your prepared text is, I think, very illustrative. But as you proceed, try to tell us what this is all about. Because it seems so technical, and yet the content, I think people can understand, matters, and the percentage of content in a final product matters as to the final product itself, but also as to who made the pieces. I forget, I was at the auto show this morning, how many pieces there are, parts there are in an automobile. It's thousands. And so the content and where it comes from matters a lot. And so we're so pleased you were willing to come with your experience. And so give us your testimony, and then the two gentlemen next to you will participate on this and perhaps other aspects. And then we'll have some real good back and forth. And I'm sorry there may not be someone here who feels that the status quo in the TPP language is adequate, but I'm determined to have everybody test that on all sides of this issue, because it matters for jobs. So, Professor, thank you for coming here. We appreciate it.
Congressman Levin, Senator Brown, honorable members of the Ways and Means Committee, good afternoon, and thank you for this opportunity to speak to you about the impact of the TPP for the auto manufacturing supply chain, and in particular on the TPP rules of origin. As we all know, a complex product like a car is made with components that are manufactured in multiple countries. And the rules of origin, while complicated and highly technical, determine whether a particular part is TPP made, and then how that should be counted going forward as it moves through the auto supply chain. In the end, it determines the national origin of that product and whether or not it qualifies for preferential tariff treatment. So with respect to these rules of origin, I wish to highlight 5 points in particular for your attention. First, despite the changes in auto manufacturing, rules of origin continue to matter greatly for trade in autos and auto parts, and they particularly matter for upstream industries that supply inputs into downstream producers of complex parts and cars. Rules of origin influence companies' decisions on the sourcing of their upstream components. Second, the TPP rules of origin differ from those of past U.S. trade agreements, and in particular, it's worth focusing on how they differ with NAFTA, because the Canadian and Mexican markets are top export destinations for U.S. autos, and the North American supply chain is already highly vertically integrated. under NAFTA, in order for a car to qualify for NAFTA preferences, it must have a regional value content of 62.5%, as calculated through what's known as the net cost methodology. Some products, such as heavy-duty trucks and some parts, are subject to a lower 60% threshold. By contrast, under TPP, this threshold is set for cars at 45% under the net cost method, and for some parts, the threshold is as low as 35%. The TPP also allows for use of an alternative methodology, so this is an either-or choice for companies, where they can use transaction value rather than cost to meet the thresholds, which differ depending on whether this is a build-up or build-down methodology. NAFTA does not allow for this. Because the rules are not exactly analogous, so these both refer to the transaction cost. And build down, you take the net value of the product itself, and then you subtract out those which come from non-originating destinations. So for example, if the cost of this product is $1,000, but there's a part which comes from China, which is $300. There's a part which comes from Thailand, which is $700, and so on and so forth. You subtract all of those down. So it's a build down. Build up is the opposite. You take the value of all the TPP parts, so a part that's made in the U.S., a part that's made in Mexico, a part that's made in Japan, and so forth, and you add all of those up. So you build that up, and you look at that number compared to the overall value of it. So whether you're building up or building down gets to a different percentage. And there are different thresholds that are in the agreement depending on whether we're talking about building up, building down, which both look at transaction value, as opposed to if you're looking at cost, where you use a net cost methodology. And under NAFTA, you only permitted in most instances to use a net cost methodology. There are some exceptions to that. But even with net cost, NAFTA has a higher threshold, 62.5%, than TPP. What's worth noting, though, is that there are other differences between these agreements in terms of tracing rules, in terms of the appendix, and so on and so forth. So we can't undertake an exact apples-to-apples comparison, even for the net cost methodology. However, overall, we can say that the TPP rules of origin stipulate a lower threshold than NAFTA does. This leads to the question of why this is the case. And my third point is that these lower thresholds are a result of a compromise between Japan and other TPP countries. I've prepared some charts in Figure 1, which show the Japanese imports of select auto parts. And what you'll see is that Japanese car manufacturers source a growing proportion of their component parts from non-TPP countries, especially China. So the red line there symbolizes China, and you'll see China growing rapidly over the last couple of years. Japan, therefore, sought the lower thresholds in these rules of origin in order to ensure that their cars, which are made with non-TPP inputs, will nevertheless qualify for TPP tariff preferences. This then leads to the question of what is the impact then for U.S. producers?
Okay, by the way, I'm not sure everybody has the chart. I think we in the Congress do.
We distributed it.
Okay, so I think everybody has it. And you can see the various countries and the rate of growth. Okay, thanks.
And you'll see a rapid growth there in terms of Chinese supply into the Japanese auto manufacturing chain. So what about the impact for U.S. producers? My fourth point is the impact varies and is complicated depending on the firm's place in the production chain and the nature of foreign competition. Some downstream producers may actually welcome the additional sourcing flexibility afforded by the TPP rules of origin. These are companies that might seek to substitute a portion of U.S.-made inputs for those from China or other non-TPP countries, but they have not yet done so because of the importance of the North American market and the higher NAFTA rules of origin. The lower TPP thresholds will allow them to make some of these changes. As Figure 2, which shows U.S. imports of select auto parts here, shows that Chinese imports into the U.S. market have also grown, but they've grown only selectively for some parts. Importantly, then, there is the risk that the TPP rules of origin for autos and auto parts will facilitate rather than hinder this continued growth. Other U.S. downstream producers, however, may not be so supportive. They may be neutral or they may actually disfavor these changes, depending on whether or not they do not plan to make changes to their supply chains and whether they would like to force their Japanese competitors to shift away from Chinese-made parts. As far as upstream component producers of components and other inputs, again, the impact also varies. Producers of cost-sensitive and relatively non-complex inputs, such as steel, tires, will likely be hurt. The lower TPP thresholds allow NAFTA producers to substitute away from U.S.-made inputs to lower-cost non-TPP alternatives, while still maintaining their trade preferences.
Now, upstream means what? So we all understand when you say upstream.
Upstream means the parts that get supplied into each of the different parts, which then go into, say, the chassis, the body, which then eventually goes into the eventual making of the car itself. So we're talking about steel, we're talking about tires, we're talking about engine parts and so forth. On the other hand, producers of parts and components that are relatively complex and which do not face significant competition from China or Southeast Asia, or for which proximity matters, these producers are unlikely to be affected. This is because the TPP still requires a regional value content of 45%, and it's unlikely that these inputs will be substituted out. So in short, the net impact of the rules of origin is complicated for U.S. producers, and I urge you to consider carefully the supply chain position and competitive interests of the producers in your district, especially for auto parts and other inputs, if applicable. Lastly, should you wish to request any changes to the rules of origin, one possibility is to request that the thresholds rise over a phase-in period as they did in NAFTA. This would guard against substitution of U.S.-made parts and inputs, and it would facilitate the creation of pan-TPP supply chains. However, USTR has pointed out the agreement is a delicate balance, and such a request might require the rollback of concessions obtained for U.S. exporters in other parts of the agreement. Overall, let me emphasize that while the rules of origin are highly technical, for some American producers, especially of auto parts and other inputs, they are arguably as important, if not more so, than tariff concessions. I encourage the committee to consider its implications carefully as you deliberate on the overall merits of the TPP. Thank you.
Thank you very much. Mr. Nasser?
Thank you for inviting me here today, and thank you for your time, members of Congress, to deal with this issue. Wanted to tell you that, on behalf of the 1 million members and retirees of United Auto Workers, we really studied this deal in great detail, and our board decided in December that it is not something we could support and unanimously voted to oppose the TPP, and I'll tell you why. When we look at the auto industry, as it's been stated, it's important to look at an industry that, cars estimated leads to employment of 7.25 million folks. So you can't just look at the final assembly. You have to look at all the parts and components. We've also seen over time that more and more of the work that's done in the car, more of the economic value is done at the parts sector. It's really less and less at the final assembly. So there's really been a transformation in the way the industry operates. Unfortunately, manufacturing wages are not keeping up. 1/4 of manufacturing workers make less than $12 an hour. Many have poverty wages, and the wages have not kept up with really other occupations whatsoever. And at the same time, productivity has improved tremendously, has practically doubled in auto parts and auto final assembly since 2000 from 2014. So something is wrong with this picture. So we look at the TPP, and we're not happy with the status quo. Sometimes you hear this argument that says that, if you're not for the TPP, then you're supportive of the status quo. Well, we're not supportive of the status quo. We think that we should have a more level playing field and expand it to more markets. That's what we think. Unfortunately, the TPP goes the other way. It goes backwards. Major reason why is we've asked, we've looked long and hard to try to find out where are the viable export markets for U.S. made vehicles. I want to emphasize U.S. made, not made by U.S. companies in a different country. And the answers we get back is there's a possibility in Japan, Vietnam, and Malaysia. We have not seen any credible evidence to support that contention. So we don't see much of an upside as far as export markets, but we see plenty of a downside. And a major reason why I noticed that the focus is on rules of origin and market access, but we can't have this conversation without talking about currency manipulation, because it has been estimated that a car from Japan, for example, and it's not just a Japanese problem too, is $5,000 to $11,000 less expensive immediately because of currency practices compared to a U.S. car. So that's what we're dealing with already. And the fact that there aren't any enforceable provisions against currency manipulation really leads a pretty bleak picture of how this agreement will play out over time. And we've lost millions of jobs already because of currency manipulation. And again, it's not just a problem with Japan. Now, the rule of origin, which we're discussing here, as it's been said, it's weaker than NAFTA. And I think it was quite telling that the Mexican and the Canadian governments and auto industry were raising a lot of concerns about the standard as being too lax. It was being negotiated. That kind of caught our attention because when you have a standard like this, it leads to question, to whose benefit is it? And it really seems that it is mostly beneficial to Japanese automakers. And again, Japan is the most closed market in the developed world, and clearly see the opportunity to expand their networks to non-TPP countries. And one thing that's been argued is, it's not much of a, it won't change sourcing patterns. There's not much of a problem. Don't worry about it as far as leakage to non-TPP countries. Well, if that's the case, then why such a weak standard? And many of the parts and components, by the way, are well below 45%. And if you start doing the math and you start adding all the parts and components that are less, that have low percentages, and when they're counted towards the cumulative value of the car, they're considered to be fully of value. You actually have you could have a very low standard when you add it all up. A couple other things when looking at the auto issues here, and as I said, I think it's real important that we look at the impact on communities and the entire supply chain. Another real issue here is have to discuss the labor standards, because labor standards are sometimes put in a corner in these discussions and are seen as this a human rights issue that's not related to economics. It's very much related to economics. We have seen this in our experience with NAFTA, for example. Where there were promises of job expansion for manufacturing, we've seen the exact opposite. And one of the reasons why is because Mexican auto workers in general, have abysmal labor rights standards. It's very hard to join an independent union. The oversight boards are notoriously biased against workers. And this really contributes to the fact that wages are so low. Auto workers in Mexico often make about $4 an hour. So that's what we're competing against.
Okay, we're going to have a separate panel on that later this month.
I appreciate that, but I just want to make the point it's an economic issue for us.
And Mr. Hickey, I think you need to leave in a half an hour, so.
My plane
Sure.
got canceled, so I have to take an earlier one.
Okay.
I'll just wrap it up one thing. When looking at this, also remember it's a dock-on agreement. This is going to expand over time, and it's a real question about how these standards be changed when more and more countries join. So it's important to look at TPP not as a static agreement. Thank you for your time.
Well, good afternoon. I'm Bill Hickey. I'm president of Lapp Hickey Steel, which is a Chicago area-based steel processing and distribution business. Lapp Hickey is a family-owned and operated business founded in 1926. We have 7 operations with about 550 employees, and automotive parts manufacturers are one of our very large customer groups. Firstly, my comments today are about the TPP and U.S. trade policy. First, the United States is the most open market in the world. The proof of this fact is the massive imbalances we accumulate annually in the good trades deficit, which will surpass $725 billion in 2015. My question to this panel today is, what are the goals of our trade policy? I have always believed that trade policy should promote the economic interests of the United States. I'd like to repeat that, Congressman. I believe that the trade policy should promote the economic interests of the United States. Having observed firsthand U.S. trade policy over the last 4 decades, I believe that current trade policy is designed to increase the dependence on imports of manufactured products and goods. The current trade policy has the effect of lowering the standard of living for the citizens who lose their employment in manufacturing jobs. Manufacturing jobs create wealth. All the people and the communities that are involved in the process share the wealth that is created in the United States in manufacturing. The definition of insanity is doing the same thing over and over again and expecting a different result. I believe passing TPP is economic insanity. Before I go into specifics about TPP, let's do a quick summary of the last free trade agreement the United States agreed to in 2010, the Korean Free Trade Agreement. This administration sold the Korean Free Trade Agreement on the premise that the United States would export to Korea and would increase by $10 to $11 billion. And those exports would create 70,000 jobs in America. Today, at the start of 2016, let's review the performance of that free trade agreement. Since 2011, the results of the trade with Korea is the United States has about the same amount of goods and services sold to Korea as we did in 2011. Korea has gone from a $13 billion trade surplus in 2011 to $26 billion trade surplus in 2015. The results of the FTA is not an export increase this administration promised, but a deluge of Korean manufactured goods that have put tens of thousands of American manufacturers on the unemployment line. I have witnessed this economic destruction in the domestic steel industry since the free trade agreement was approved. There's some attachments I put on about the huge increase, the copy of the administration, and also the huge increase in steel imports. The crazy thing about the steel imports is that one of the big steel imports they're sending in is oil country tubular goods, which we think are being produced in China and then being finished in Korea. And there's about 9 oil wells in Korea. So why they're shipping millions of tons of oil country tubular goods is because this is where a market where they can sell it. I will highlight, for the sake of my limited time, 3 areas of the critical flaws in the massive TPP document. Currency. The policy of currency manipulation, one of the most pressing issues facing the United States in international economic policy. Several parties to the TPP, including Japan, Malaysia, Vietnam, and Singapore, have been accused of manipulating their currencies with the aim in gaining a competitive advantage of international trade. The TPP contains no provisions regarding currency manipulation. There is no provision providing for the consideration of complaints by one TPP party that another TPP country has an exchange rate policy that is creating economic imbalances. This currency manipulation issue is critical to any free trade agreement. State-owned enterprises. The rise of state-owned enterprises or state-sponsored enterprises is a challenge to a rules-based trading system. New rules are needed to ensure competitive neutrality and transparency with expedited trade remedies for industries that must compete against these SOEs and SSEs. The TPP countries have many state-owned enterprises and state-sponsored enterprises. The chapters and annexes to the TPP agreement provide expansive exemptions to the state-owned enterprises. This problem is compounded by the transparency rules that have unlimited discretion in claiming confidential treatment of information. So I run a state-owned enterprise and we say, well, we'd like to see your cost. They said, it's confidential, you can't see it. Interesting rule system. Rules of origin, which we've had a lot of conversation about already. And the objective, I come back to, the objective of a trade agreement is to have the countries that are partners to the agreement receive mutual benefit from that agreement. That's maybe a mutual benefit. That means we all benefit on the agreement. The rules of origin is the process to ensure that the benefits to the free trade agreement is shared by countries that are party to the agreement. I do not understand why or how we have rules of origin for each FTA agreement. The rules of origin in NAFTA require roughly 62.5% regional value for auto parts. The rules of origin for Korea is 30%. I have been told that the rules of origin for the TPP maybe only require 40% regional content for inclusion in this agreement. One of the problems with the TPP is the length and detail of the text required in this agreement. A trade lawyer is required to decipher anything in 5,600 pages. This rules of origin will allow other countries outside the TPP to provide material and products into this free trade area for the benefit of non-TPP member countries. This could have a dramatic effect on auto parts supply chain and all the industries that support the supply of that industry. These are three of the major problem areas that are the current TPP agreement. This agreement will be great for trade lawyers. This is a full employment for trade lawyers agreement. If approved, we can continue the loss of manufacturing companies and the good jobs that those companies provide to their employees. Let's debate and adopt a trade policies that ends these massive trade deficits. I welcome your questions. Thank you.
Senator,
Thanks, Sandy.
and maybe we'll try to. So Charlie Rangel has joined us, and Bill Pasquale. So Mr. Hickey has to leave, and Lloyd Doggett has to leave at 5 because planes are canceled, as I found out yesterday 3 times. So maybe we'll focus in on Mr. Hickey for a bit.
Thank you, Sandy. Let me ask, I want to ask a question of all three of you, then a specific question, Mr. Wu, and I'll start that way. And whenever I see Charlie, I'm reminded 10 years ago, somebody told me one of the biggest compliments I've ever had that I talk like Charlie Rangel. So I kind of like that.
Senator, why don't you concentrate, if you will, on Mr. Hickey?
Okay, well, I'll do that. Okay.
We'll all get a chance for him, and then.
Also,
Okay,
but-
okay, fine. Well, I'll start with one question then with Mr. Hickey, then others have questions of him, and then we can come back. It seems that in the last 15 years, really since we passed PNTR with China, and maybe before that, but mostly it seemed to accelerate then, that it's become a business plan for a number of U.S. companies to shut down production in Baltimore or Patterson or Cleveland and move overseas, especially to China, and then sell those products back into the United States. The auto industry doesn't do that so much until we recently, the news recently on GM is they are opening production and planning to sell some of those sports utility vehicles back into the United States. Do the rules of origin here and this agreement overall lead you to think that's going to become, we're going to see more of that more Asia-based production facilities opened by U.S. auto companies with the intent not just selling in East Asia, but selling back to the United States?
Senator, why wouldn't it? I mean, we have seen the ascension to China was the opening of the door. I mean, the most profit, because of the currency manipulation that Japan does, when they devalued their currency from 80 to 120, what was that, 2 years ago? It made Toyota the most profitable auto company in the world. They make more money in 2014 than GM and Volkswagen combined. That extra money is going to give them opportunities to build factories all over low labor cost countries in Asia and ship those products to the U.S. And when they get the dollars for them, they'll translate them back to the currency in Japan, and they'll show great earnings.
Mr. Wu, do you want to comment on that? You did a bit, but the change in the rules of origin, it's hard to predict, but picking up the senator's question, comment on that.
And you suggest, if I could add, you suggested that there are companies planning to make changes if this percentage is reduced as much as as the agreement looks, from the NAFTA 60 plus to 40 plus, that companies already, if there's evidence, I don't know, or if that's opinion on your part, that companies are planning to make those changes in their supply chain as a result.
So, Senator, in my opinion, there are two tensions at work here, right? There's one, which is the benefits of economies of scale for companies, which would suggest you would want to concentrate production in one site so you can attain economies of scale. Against that, you have the complexities of customization and localization, which we also see production is being disaggregated down closer to the point of sale. So you've got these two tensions. Now, my point here is that with respect to those companies, in particular foreign companies, but this could also be U.S. companies, which are manufacturing today in the U.S. because of NAFTA, they are prone to want to substitute out a portion of these inputs because they already do so in Japan, for example, with inputs from China. They use NAFTA-made parts today because of NAFTA rules of origin, but when these thresholds drop, why not substitute and consolidate these out with one set of inputs from one producer upstream in the supply chain? So my point is, it depends on the complexity of the good. If you have a Chinese competitor and there's not a difference here in terms of the quality and so on, or sophistication here, you're apt to be substituted out. On the other hand, 45% of this still needs to be regional value content within TPP. So if you're a relatively sophisticated components maker at the top end of the supply chain and so forth, you don't have less of a risk. So that's why I say it's a very complicated question without an easy answer here.
Can I comment on it? One of the points that the professor brings up is that the very complicated parts probably are safe. That means high volume, low value parts are not safe, which are a lot of manufacturing jobs relative to auto supply chain in the United States.
I'd like him to comment on that. Professor, would you comment on what he just said, please?
Like I said, I think that the companies, as a result of TPP rules of origin, have several additional points of flexibility, right? Just as after NAFTA, you had the flexibility of now sourcing from Mexico or from Canada, right? You now have an expanded set from which to source from. In addition, the lowering of the rules of origin give you added flexibility to source from non-TPP countries and still have the same types of trade preferences. So I do agree that I think where you face competitive substitutes, right? And again, competitive substitutes are not always low cost, high volume, although this is increasingly where we do see competition, right? But we also see competition at the high end for certain sophisticated products as well. Any place where you see this type of competition and there's a lowering of a threshold and where proximity does not matter so much, right? So there is a possibility you could be substituted out, and that applies for U.S.-made parts and U.S. jobs.
And what if that happens? What if you are substituted out? Because one job in America, in the United States, is very different than another job in a foreign country in terms of making parts. And so it's not a one-for-one exchange here. I mean, I'm concluding, excuse me, Mr. Chair, but I'm concluding from this, and having studied this for a long, long time about origin, that it depends on what kind of jobs we're talking about. I mean, if we're substituting of jobs that are paying the same, that's a different story. When we wiped out our manufacturing base, not only because of NAFTA, even before that, what happens is the jobs that were created by these trade deals don't pay half of what the other jobs pay, or pay 40% less. And then on top of that, the benefits are not there as well. We're not talking about comparing jobs here. This is like apples and oranges when you get into the weeds here, and you are getting into the weeds. I respect your opinion. I disagree with what your conclusion is.
How do you disagree?
I'm sorry?
In what sense? I mean,
Because the bottom line is, which jobs do we create and which jobs are we willing to accept their demise? And when you compare those incomes, they're very, very different. And this is how our manufacturing base has been absolutely decimated, particularly in the Midwest.
okay, but Mr. Rango,
I just
Charlie
want
has,
to,
but I think
Mr. Hickey and
the premise is different.
how long have you been in the steel business?
I've been in it, my grandfather started in 1926, February 1st. So February 1st, we'll have our 90th year of our family's been in the business.
You sounded so emotional and so patriotic in stating that you always thought that our negotiators should do what would be in the best interest of the United States. And we recognize that American business people have had record profits in the last 2, 3, or 4 decades that you referred to. And it's my opinion, legal opinion, that the CEOs that have influenced our trade policy have a fiduciary relationship, not to people in your family or American workers, but to their shareholders. And I don't know whether they are required to take in consideration the low wages that are there or manipulation of currency. And it's pretty well accepted that no one was concerned about your family in negotiation. They're concerned about shareholders. How do you handle that in view of where you believe that America should have a responsibility to American business people that have the historic history of making us proud of what we make? How do you explain that as an intelligent American when you know that the corporate America has nothing to do with wanting to have fairness, equity, that they have really profited by finding countries that find people that are able to produce without paying the salaries that unions have fought and in many cases died for, that standard of living. So what do you say about that?
Well, Congressman, what I say to people is the fact is if we don't produce in this country, at some point we won't be able to consume. Because if we keep running these trade deficits, which we are massive trade deficits, we're north of $700 billion, $800 billion in merchandise trade deficit, and we have a surplus in services, which is insurance, it's royalties from selling iPhones. I'm not sure how much of that money ever comes back to the States and is actually sitting in one of those accounts in overseas because they don't want to bring it back and pay the taxes on it. But I keep coming back to the point is we don't have a strong economy here. We are not going to have the ability forward to have raise the standard of living for our citizens.
But you don't have to be an economist to understand that.
I'm not an economist. I'm running a company.
I know, but haven't we lost jobs for the last 4 decades? Haven't our jobs primarily gone manufacturing jobs gone overseas? Is there a challenge to that thinking? That because, and so what you're saying, I think that most Americans saying that U.S. steel makers are just out of business, that you're just the last of a whole lot of people that haven't realized that the whole thing is supply and demand and how much money can be made. And that has to be a consideration when they're negotiating. Was the UAW sitting at the negotiating table when this was being negotiated? Did you guide the principles, or was it not corporate America?
No, I mean, we our advisory committees, we had input, but certainly the policy priorities that we had weren't reflected in the trade deal here whatsoever.
What you're talking about NAFTA, whatever you talk about, I have no further questions, but it just seems as though the outrage that you have, I hear about it, but I don't hear about it in the presidential speeches and debates that this is where America is going. It just appears to me that if anyone can make something and they don't have the same standard of living, that we can say that the consumers are going to get it cheaper, but more importantly, the shareholders are going to make a lot more profits.
So, Mr. Hickey, before you go, does anybody else have a question following up? Yes, please. Adam?
Thank you, Mr. Chairman. Who are the winners in the automotive industry in this agreement? Is it just manufacturers who can get lower cost parts, or are there no manufacturers? Are there no winners in the auto industry, in your view? And the proponents of the agreement would, at best, point to winners in other industries to offset the losses in the automotive industry.
Well, let me just ask you, following up on that, if I might, in terms of the auto industry, steel is such a major supplier. We're reminded of that all the time. So, Adam, if I might ask Mr. Hickey before he leaves to follow up on your question. And it goes back, Professor, to your comments. Do you think it's possible to project with any reasonable certainty what might be the likelihood of the impact of this different rule of origin on steel production in the United States?
Mr. Levin, I believe that about 25% of domestic steel production is consumed by the auto industry or the auto parts manufacturers. This rule of origin will decrease domestic production of automotive parts through substitutes of parts coming out of Asia. I mean, our company, we sell steel to parts manufacturers all through NAFTA. We send truckloads of steel down from Chicago down to one of the transition points down into Mexico because of the reality of the parts we sell, et cetera, which are high-valued metal parts. But the other side of this is that I'm sure that all those companies, if they had the opportunity to go to a lower-cost third world market other than Mexico, will go. They're being driven, as Congressman Rangel talks about, they're being driven by the fact is that it's not just the shareholders, Congressman, it's the hedge fund guys and everybody else who's now in there telling them what to do.
So is a factor, let me ask you in this, and then others may pitch in before you go. Is a factor in this, take China, for example, and Korea, which have a major surplus in steel production, right?
An unbelievable surplus.
So when you look, because I think as we try to honestly assess the impact of each of these provisions, which I think we're trying to do, and the rule of origin is obscure, but really not in terms of impact. You think with the excess steel production, say in China, and I don't know about Vietnam.
Vietnam's now exporting steel to the United States, Congressman.
Okay, so include Vietnam then, and Korea. Is that a factor in determining the likely impact of a lower rule of origin on production of steel in the United States? Or is that too simplified?
Sure, I mean, if you have excess supply in the world that's going to find somewhere to go, which is what's happening now with the Chinese product, it's flooding Mexico, it's flooding Europe, et cetera. What's going to happen? It's going to wind up here in parts.
Professor, so I'm asking you as a student, and I asked you a very oversimplified question at Harvard Law School. I did that once. What would your answer be?
I agree. I think it's a major risk for U.S. steel industries. Like I said, any product for which there is a cost substitute that's fairly non-complex is at risk here. And steel is a major input. And not only that, there's a glut in this global steel market. Many of the Chinese manufacturers are SOEs. And so certainly, and there are additional rules we haven't commented on here, one of which is duty drawback, which is included in TPP, which allows for the refund of duties for certain tariff lines once it gets put into export. So when you take all of this together, I think there are major risks for the U.S. Steel industry.
Explain. Go ahead, please.
What are some of the specific auto parts that fit in that category that you feel are a substantial risk?
So I think anything which is an upstream input, which is relatively non-complex, for which there is significant competition coming out of Asia and elsewhere, which is likely to be cost-driven, right?
So the higher the tier 3 and tier 4 auto supply manufacturers much more at risk of losing business as a result of the rules of origin in TPP than tier 1 or tier 2 suppliers, right?
Exactly. And we've seen Chinese manufacturers move up the supply chain, right? So if you look at the charts, for example, you can see how Chinese.
Which chart are you referring to?
So I'm sorry, if you look at the charts just in terms of what we've seen in Japan. So figure 1E, for example, shows how, Chinese have moved into airbags. However, transmissions is something that was relatively sophisticated, right? But if you look at figure 1C, even within the last couple of years, the Chinese have made major headroads into transmissions as well. So it's not to say that, if you're a sophisticated product, you're necessarily safe. It really depends on what the competition looks like, where you are in the supply chain, and to some extent, what types of subsidies your competitors are being given to move up the production chain.
Pitch in.
Yeah, thanks, Andy. Professor, well, first of all, I want to thank you for your testimony before you have to leave. I thought it was extremely compelling, and you have a way of translating what the professor's saying in a way that I think makes the case very, very powerfully. I keep hearing this complex versus non-complex, and I'm starting to think that they're are communities out there that will be labeled complex communities, and they may do just fine. And then there's the non-complex communities and neighborhoods and cities, and they're going to take it on the chin with what's being projected. I understand why Japan push was a driver in the agreement to get to the lower standards, 40%, right? 45%, as compared with NAFTA, because they want to protect their ability to build those parts in from lower cost non-TPP countries like China, for example. So that makes sense to me. What I don't understand, and maybe you can help me understand it, what's the leverage that Japan had in the negotiation of the agreement that has allowed them to succeed in securing that? I mean, would they say, well, here are all these other things where we made concessions, and would the U.S. negotiators say, yeah, and we weren't going to get those concessions unless we conceded over here to go from 65 to 50 or 45, right? I mean, where's the leverage? I want to assume that our trade negotiators aren't having their lunch eaten here, but explain that to me. If Japan was a driver on this, and maybe Mr. Nasser as well would have a perspective on it.
Goodbye, Mr. Hickey. Thank you so much. And by the way, I think it's a salient question, and that's why we were hopeful we would have a representative USTR here. And I think we'll want to ask USTR that directly. If you want to comment, you don't have to. But Professor? Senator Brown has to leave. Thank you very much.
Very briefly, I was going to make the same comment, Congressman, which is that this is a question which should be directed at USTR. But the issue is where this was one of the last issues to be decided in negotiations. So it certainly shows the importance for Japanese. This was one of those bottleneck issues where many countries were not willing to put down their final proposals. In my own view, looking at what the other issues were, which were still on the table here, many of this is for agricultural market access for U.S. agricultural interests.
I want to add that up front, as for entering the negotiations, Japan agreed to the longest tariff phase out for any product within the TPP for cars and trucks. So it couldn't have been, from our point of view, a trade-off within the auto space. It had to be somewhere else. I can't really tell you what that was.
No, I think since I was there when the bottleneck was attempted to be broken, though we didn't have a specific number always in terms of the auto sector and the phase-out of tariffs, we always were basically satisfied that it would be a long period. We were hopeful it might be 30 years. Our original proposal was to tie the phase-out to particular improvements in access. That wasn't accepted, and it was said we'll have a long automotive tariff reduction period. And I think that objective was basically met, if I might say so. So I think you're right. That wasn't part of the discussion at the 11th hour. It was other issues, and I think we need to have further discussions about that. Yes, Mr. Pesco,
like to
and
ask-
welcome to Marcy Captor, who was at the auto show this morning also, and her plane wasn't canceled, I guess.
But it was 2 hours late.
Mr. Pesco.
Professor Wu, I read in your testimony, and I apologize for not being here at the beginning of the hearing, that the TPP thresholds are a result of a compromise with Japan, because Japanese automakers source a large amount of their parts from non-TPP countries. I think you mentioned this, like China. So in your estimation, and remember, Mr. Chairman, today is the birthday of Alexander Hamilton. And just a little over 200 years ago, he was on the banks of the Passaic River at the Great Falls in my city. with George Washington and the great debate, in the midst of the great debate with Jefferson about whether we should remain an agrarian society or not. And we have a lot to thank him for, Alexander Hamilton, as Treasury Secretary is now weighing in his decision. But in your estimation, why were these precise numbers set, and what benefit will it have in promoting exports or boosting our auto manufacturing sector?
So, Congressman, I think that's a question better directed for USTR. Like I said, press reports suggest the Japanese wanted even lower numbers.
Right.
And so what the trade-off is, it's not clear that those trade-offs necessarily came in the auto sector. And the suggestion from the public report suggested that those trade-offs came in other sectors. But the
I'm
specific
sitting-
question should be directed to USTR.
I'm sitting there representing the United States at negotiations. And that, I don't question what you just said. But my bottom line should be, to me, you tell me if I'm wrong, how are we going to promote exports and how are we going to boost manufacturing so that there's jobs being created of the right level of income in the United States of America? So what do I do in this particular situation? And what have we done in terms of what you already know? And do you think it will boost manufacturing? I mean, these are the jobs that we're talking about in the United States. This is why you have a political upheaval in this country right now.
All right, Bill, I think Mr. Wu has said the question should not be asked of him. And I can say I was at Atlanta during that last phase, and none of us, whether it was Republican or Democratic staff or myself, knew where the rule of origin issue was at the time or where it would end up.
Well, that's sad, isn't it?
I didn't like it, and neither did, I think, either Republican or Democratic staff who was there. But I think
We're leaving these decisions.
we need to ask USTR that. All right, I promised you guys you might be able to leave by 5. Is there anything else, Marcy, do you want to,
Am I allowed to ask one question?
as long as they can stay?
Thank you, Mr. I'm going to borrow your microphone, Mr. Pasquale. Okay. Is this on? Okay. Thank you so very much, and I apologize for being late because I was up in Detroit and for the auto show. My question is, I know Congressman Levin and I have worked on market access for our entire careers, and we haven't been very successful. And I don't know who prepared these charts, but they're very sobering, and they don't report a very good story.
Professor Wu's chair.
They're very good charts, and it shows our country losing on the trade front. I'm interested in who's financing the outsourcing of this production. If you had, are you able to provide to the record lists of either U.S. or other companies, financial companies, that are moving these assets around the world? I can tell you many of the local banks and credit unions I represent aren't. And so I'm interested in who has those portfolios and how we would go about tracking that. For instance, Chinese investments that may have U.S. banks involved. Who would you guess are the major financial companies? There is a book Kevin Phillips wrote a few years ago called American Theocracy, Chapter 8, The Financialization of the U.S. Economy and the Concurrent Diminishment in Jobs in Our Country and Manufacturing Jobs in particular. And you can just see the manufacturing numbers going way down and the finance numbers going way up. So I'm interested in knowing who's financing this. Outsourcing? Who's number one? If you had to put your money, where would it go? Who are you betting on?
Well,
I mean, I could answer part of that, which is I do not know about the financial backing, but I do know this. We have seen almost a long list of auto suppliers and manufacturers that have moved production to Mexico and ship those exact same parts back up into the United States. There's a long history of this. You can look at companies like American Axle, I can name a whole bunch that have done that now we would contend that the investment rules contribute to that. Absolutely. Direct foreign investment has, according to IMF, has tripled as a percentage of GDP in Mexico since NAFTA. So the investment rules and the company's behavior is very clear. There's been a massive amount of work moved to Mexico and other countries and shipped right back to the United States. That's factual.
And who would finance that transaction? How big a bank do you have to be to do that? And which banks are they?
Let me
Where do we
say,
go for that information?
the issue of the integration, or whatever you want to call it, of automotive production in North America, we're going to discuss later this month. So I think we should leave it at that. Unless, Professor, you want to comment. I think you don't.
No, this is not an area of my research.
Could I just ask, Mr. Chairman, if you were to go to look for answers on that, where would you go?
Personally, you would look at the transactions which are involved in terms of setting up both the investment itself as well as the specific transactions that move the goods as well as to move the funds. I'm not sure how much of that information is publicly available versus business proprietary information, but certainly I think that's where you would go to look for that information.
All right. Well, if there's nothing else, we just want to thank you and Mr. Hickey. We're just working hard to understand the key issues in TPP. There's going to be testimony in a couple of days before the ITC. I'll be one of those. There are, I think, 50, 60, 70 different witnesses now. And I do think that that's a positive step, that there's that kind of interest, because of the importance of TPP, 40% of the world's GDP, and involving Japan and some other countries that we don't have agreements with. And it hasn't been easy at times doing this. But I think, if I might say so, the discussion today, especially about rule of origin, is really important for us to understand these next months. Because in the end, both of you have said this, and Mr. Hickey, who owns a company, embodies it. What we need to understand is the impact of any trade agreement on the lives of people, on jobs, on income. And that's why the fight has been by a number of us, and Mr. Rangel and I have worked together, sometimes almost the two of us by ourselves with some support from our colleagues, to try to shape trade on the basis of spreading its benefits. And TPP represents that challenge we have to understand. And the rules of origin, as said, John, is obscure, but in terms of potential impact, really isn't. So on behalf of all of us, and I hope eventually the whole Congress and the administration and the American people, we want to thank you for coming. Thanks very much.
Thank you.
Thank you.
Thank you.
Thanks, Charlie. We got gray hair on this together.